Imagine losing your entire fortune in just 48 hours because of tea leaves. This nightmare became reality for thousands of traders in Hong Kong during the catastrophic tea crash of 1883. In the early 1880s, Hong Kong had become the epicenter of the global tea trade. British colonial merchants, Chinese tea producers, and international speculators all converged on this bustling port city. Tea wasn't just a beverage, it was liquid gold flowing through the arteries of the British Empire. The boom began in 1882 when rumors spread of a poor harvest in China's tea-growing regions. Prices skyrocketed as merchants hoarded massive quantities, expecting even higher profits. Warehouses in Hong Kong overflowed with tea chests worth millions of pounds. Everyone wanted in on the action. John Morrison, a prominent Scottish trader, famously declared, "Tea will make us all kings before Christmas." He couldn't have been more wrong. The crash started on March 15, 1883, when a telegram arrived from London. British consumers had drastically reduced tea consumption due to economic concerns back home. Simultaneously, reports confirmed that China's harvest wasn't as poor as initially feared. Panic erupted instantly. Within hours, tea prices plummeted by 60%. Traders who had borrowed heavily to finance their purchases found themselves drowning in debt. The Hong Kong Stock Exchange descended into chaos as desperate merchants tried to sell their worthless inventory. The human cost was staggering. Morrison lost his entire estate and died penniless 3 months later. Hundreds of Chinese tea workers became unemployed overnight. Several major trading houses collapsed completely, taking smaller businesses down with them. But the crash's impact extended far beyond Hong Kong. The disaster sent shockwaves throughout Asian markets, affecting everything from silk to opium trading. Singapore, Shanghai, and Calcutta all experienced severe economic disruptions as interconnected trading networks unraveled. The British colonial government, initially reluctant to intervene, was forced to implement emergency measures. They established new regulations for commodity trading and created the first market oversight committees in Asia. These reforms would later influence modern financial regulations across the region. The tea crash also accelerated the diversification of Hong Kong's economy. Merchants who survived began investing in other industries like shipping, banking, and manufacturing. This economic evolution laid the groundwork for Hong Kong's transformation into the major financial center we know today. Perhaps most significantly, the crash demonstrated the dangerous volatility of colonial commodity markets and the interconnectedness of global trade. It served as an early warning about the risks of speculation and market manipulation that would echo through financial history. The next time you sip your morning tea, remember how these simple leaves once brought an entire colonial economy to its knees in just 2 days.